Hey everybody, it's Daniel here from InfoRest. Hope you're all doing well. So it's been some time since we didn't talk about the markets. So let's talk about what's going on. Now, we have the government shutdown that is currently going on, and we didn't get non-farm payrolls and certain positioning data, which basically leaves us in the dark. But nonetheless, the market doesn't care. The market continues to go up higher. The market continues to melt up higher, like I talked about in my previous video. Don't try to short these markets. They continue to melt up higher and continue to kill the bears. So, and there's a reason why I've got two sections on my YouTube channel. So there's basically market news and market updates. Market updates is more of like this. Maybe I need to change the name or something like that. Let me know if you think if I should change it to something else. So market update is more related to like trading and investing and looking at charts. Market news is more of like the economic stuff that you read in the news, kind of more related to like data, more related to what's going on in the economy. And you can see there's two different mindsets going on. One is the markets continue to melt up regardless of weak data, regardless of weakness in jobs, regardless of weakness in that we're seeing with certain companies when it comes to them laying off jobs, right? We continue to see that. Even if the inflation numbers did tick up a bit, we continue to see that the markets continue to melt up higher. So you got to put two different hats. And same thing. Today we had Tudor Jones come out and say we're going to see a blow off top and then probably the sell off to come from there. JP Morgan, I think Jamie Dimon was basically coming out and saying that we're going to see a recession in 2026, right? There's all these fear, uncertainty, and doubt, which is keeping people on the sidelines, which is keeping people from not really putting their money to work. And while they do that, the market continues to melt up higher and they continue to hate this rally. It's probably the most hated rally out there, the most hated bull market out there. And when we do get some selling, like on this day or here today, for example, we're seeing red in equities and the VIX up and bonds up as well. Or we see some selling here, right, in January when Trump came in, right? Or we saw some selling in Jan 2022 when they started to hike rates, right? But look at it at the end of the day, right? COVID. We're still in an uptrend. We're still in a bull market, right? The market continues to rally higher. The market continues to make higher highs and higher lows. What is that? That means this high is higher than this high. This high is higher than this high. This high is higher than this high. This low is higher than this low. This low is higher than this low. This low is higher than this low. And we just go up. There you go. There's your bull market. Right? Now, yes, okay, here's a bear market in that scenario, right? Here we are the same thing. Here we are in the same thing. But they've all reversed. They've all reversed regardless of the negative news. So, at the end of the day, yes, bull markets do trump all and we do see it continue to play out here, but the key thing is that while all that fear and uncertainty and doubt and economic news is out there, and while it might be true too, it doesn't mean that the stock market will act accordingly. So this bear analysis, you have to keep that out of your trading system, out of your system of investing and putting money to work, because it's not the best way to approach markets as you've seen in this chart. I don't think there's much alpha for especially a novice or a retail trader to gain from trying to short the markets. Maybe for more, I would say leave that for more professionals, more for hedge funds, more for strategic funds and firms that do that. But for a retail, I would not, I would be very careful with that. Now, I'm not saying you can't be successful at shorting. You can be, but it's not for, many of the retail individuals out there. So what lessons can you take from this? What lesson you can take from this is that the markets can remain irrational longer than you and I can remain solvent. And when you're seeing negative news and the markets continue to brush it off, that's definitely a sign that, it wants to go higher. It's as simple as that. Regardless of your theory, regardless of your, head and shoulders formation, your technical formation, your realtor sentiment formation, your grandma's formation, your dog's formation, whatever it is, whatever their opinions or ideologies are. Even with the top investors and traders out there, Warren Buffett, JP Morgan, Paul Tudor Jones, all these guys, right? Just because they share what they think is going to happen in 2026 doesn't mean that they have to or will trade off that information. So it's very important to note that opinions, keep them aside, keep them for entertainment purposes, keep it for, at the dinner table or whatever, right? To talk about and enjoy. But when it comes to the trading systems like Paul Tudor Jones, he has his own system. And if he thinks that, there's going to be a recession, he could still be long. Same thing with JP Morgan. Still long, even if they think there's a recession next year or not. Now, yes, you can look at past data, historical data, and there is lots to tell us that there's weakness in the economy. There's lots to tell us that also that it's not that bad yet. There's lots to tell us that, when you look at the inverted yield curve, that it's signaling to us that a recession is to come. There's lots to tell us that, especially when we see aggressive emergency rate cuts, that we should probably be very worried. But you want to make sure that you verify that with what the price action and the market is telling you. Market will tell you everything, the positioning, the traders, how the reaction is to certain news, good news, bad news, news failure or not, right? You'll get a lot of information from that, the macro data and etc. And again, looking back at the markets and seeing the reaction to it, seeing where the markets end on a daily, weekly candlestick also. So many things there, right? So markets can remain irrational longer than you and I can remain solvent. Today we have a red day. Today still the markets are in a bull market. There's nothing that indicates to us that we're going to see some aggressive sell-off all of a sudden. It can happen, but at the same time, there's nothing that tells us to be fearful just yet. Positioning according to we do have the government shutdown, so we don't have up-to-date data, but positioning does tell us also that, people are on the sidelines. And again, this is the most hated rally, the most hated bull market out there. So although the S&P 500 is getting close to its top of the trend line, does this mean anything? Who knows? I don't know. Will it get to 7,000 or more? Time will tell. It does look like it's getting there. It may want to get there. And with current action, it looks like that the bull trend will continue. Look at the NASDAQ, right? Put all the trend lines you want. It broke it and we continue to move up higher. Even though everyone's saying that NASDAQ is overcrowded and it's going to sell off and blah, blah, blah. But look at it. We could see 26,000 in NASDAQ. What I prefer and like the most is the Russell. Triple top here, we broke out higher, coming back, retesting this level here. I think we've been seeing some rotation in the markets where money was flowing out from S&P and NASDAQ and into Russell. And we could see that, trend happen or continue where the Russell, leads the way. In the next, month or two, maybe, right? Same thing with the Dow Jones. So rotation is the key here as things move up higher and higher, but it doesn't necessarily mean that S&P or NASDAQ will not go higher. They probably still will. And especially if everything is still in a risk-on sentiment in a bull market. So it's only today that we're seeing that, and it's a little tiny blip, right? If you look at things in a very small time frame, you might look at this and then have a heart attack and say, "Oh my gosh, look at this sell-off," right? But look here, we're kind of consolidating here, and very quickly we could retrace and we could move higher, or maybe not, right? But if you look at things from holistically, we continue to make higher highs, higher lows, and the bull market continues, right? So that's all that there needs to be said until we get, eventually when the government shutdown ends, we'll get information on data, hopefully. And if not, we have the Fed meeting coming up to look forward to. And look forward to also, next year with the Fed, with Powell coming out and possibly Moran coming in as the Fed chairman. We did hear Moran talk about possibility of seeing talk about that his neutral rate zone is 0.5%. That means aggressive rate cuts. Again, what I just said about aggressive rate cuts, you could argue with the data that we've seen before that would mean recession to come. And that's not wrong. But let's verify that in how the equity markets react to it, the positioning of it, the news failure of it, right? And holistically everything together, right? So most hated bull market continues to go up higher and higher. Other asset classes may underperform, may continue to underperform. You might be seeing, especially in real estate. And if you're interested in knowing more about the other assets like fixed income, currencies, metals, right? I mean, look at gold hitting 4,000, people scratching their head. What the heck's happening with gold? Why is gold up and silver up while the stock market is up, right? And that's just because people just don't understand that can be a theme too. Right? It's not necessarily that gold goes up and silver goes up because the world is ending. So we are seeing strength and positivity from the markets and the acceptance of this potential rate cuts to come and potential more liquidity, maybe money printing in the next year, maybe, right? So anyways, let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified in the next video, and comment what you think about this bull market and whether you buy it or not. Anyways, let me know what you guys think. Cheers. Bye.